Welcome back to Soar Financially. My name is Kai Hoffman. I'm the CEO of the Soar Financial Group. We're back in our studio in Vancouver. Feels great to be back here in town. It's a mining city. So many mining companies are based here, and also some experts are based here, and one of them is sitting right across from me. It's Joe Mazumdar. You're the editor, publisher, writer, analyst, everybody at Exploration Insights.
I make coffee too.
You make coffee too? How is it? Need some work.
I'll drink it.
No, but Joe, you've been on the program a few times now, so good to see you again. Thanks for coming back on.
Thanks for the invite.
Interesting times. Okay.
They always are.
Interesting times. And we're going to start with a very general question. Describe in your own words, what's the status of the mining industry right now?
Well, if different sectors of the mining industry are, doing different things like by commodity, definitely, in terms of the precious metals, it's slow. The sentiment's not positive. Most of the industrial commodities are being negatively impacted by a slower than anticipated rebound in China. So the price is weighing on, a lot of these commodities, inhibiting the financing. And so we don't see a lot of interest in the sector right now, in all sectors right now. One, because of China, one, because of interest rate hikes, and the banking industry right now, and people wanting to hoard cash. And so there's definitely, we see that in our subscribers as well, in terms of, up and down with the subscribers. Retail sector is definitely not there. But in the backdrop, for companies that are looking, obviously they look at a much longer time frame, we see a lot of encouraging M&A. And so, like we were talking off air, have you done much private placements? Yes, I have. I have done a few in the last month or so.
Interesting. Yeah, no, that shows interest in the sector in general, because I haven't done too
Or
many.
Delusion.
Yeah, no, it's interesting to pinpoint timing as well, because now it's May. Brings me to the timing question already, but the good old saying goes, sell in May, go away, come back in September, and good times to remember whatever it is, right? But would you agree with that? It's like timing looks horrible right now. We also got the debt ceiling discussions in the U.S. right now, and gold is being hammered.
Yeah, so the screening is the same for me. Company, jurisdiction, quality of assets, access to capital, all those sort of things. Still, if I can pick up a gem like that with respect to a company, I'll still do it. Regardless, even if it drops, 10 to 15% after, but, I'm in it for a longer term. I'm in it for a discovery, so I don't mind that. And I'm not in it for the warrants, so I don't care about that sort of stuff. I'm just in it for the potential of success. And so in these times, it's probably easier to winnow those out because the froth won't be there providing any noise for you.
Well, in your letter, you're not a trader either. Right, it's more of a buy and hold strategy.
Yeah, unless there's a specific trade that I say, oh, hey, this is going to happen. I think that, like, I did that with Sabina several years ago when, they got bashed by a permitting issue. And when I talked to management, they were convinced that, this is just minor and it's going to turn around. And I bought it and basically sold it as a short-term trade. So you could do a specific short-term trade, and I've done that in the letter, but most, as you say, are longer-term investments.
My point was you're not clearing the portfolio in May and then come back
absolutely not.
All in September, right?
Absolutely not. No, that's definitely not what we do.
Yeah, no, perfect. First topic already covered. Let's actually jump to another topic I really want to get your expertise on, and it's policies. Especially in South America. You've been traveling a lot, Latin America in general, like Mexico you've been, Chile you've been, two of the countries that have just changed mining laws, royalty schemes in Chile, for example. Can you give us an update? Let's start with Mexico. What's the new mining law there? And should we as retail investors be concerned, something we need to pay attention to?
So this is a topic I'll bring up in the Metals Investment Forum on Friday, and it's something I brought up in the letter a couple of weeks ago. So most people operating in Mexico, and there's like a lot, over 200 companies I think that are operating there, we're expecting a change in the mining reforms in September after the Congress would meet after a recess. But the AMLO government, Andres Manuel Lopez Obrador, his government, which is sort of left-wing, pushed through these mining reforms over a weekend just with their caucus because they have majority, and pushed these reforms through. And they passed. but they were actually less draconian than the first draft of them that that a lot of companies weren't happy with, and the Chamber of Mining was against. And then they came out with another version that's been passed. What it looks like is still up in the air because people are going to challenge the constitutionality of it, but also how this actually looks in terms of how it's actually bureaucratically applied and everything like that is another issue. But what the Mexican government was trying to do was they were sort of saying, oh, you know what? More than 50% of the country has already got concessions, so we're not issuing any more licenses, which is what they hadn't done since Obrador came, and so so people had to make deals with current owners, because they were complaining that over 50% of the concessions were held, but they were only getting taxes for like 11 or 12%, and so the big thing was to generate more rents, but that was more a bureaucratic thing than an actual lack of a law. Because they could actually apply their own laws that exist and try to get those taxes. So they created this other way of trying to do it such that now it's more, I'd say, harmful for exploration companies to come in and try to stake a large package of land. So if you had a theory that, oh, hey, this belt looks really good, nobody has it, I'm going to go stake a bunch of ground and stuff. The bureaucracy around staking is much worse now, such that most junior companies probably are not going to touch Mexico with respect to coming in green. People who have ground are good, but we have seen issues where the probability that your concession could get canceled for something, like you haven't put an ecological survey or you haven't talked to the locals or something like that, and they point that out to you, they can cancel some concessions. And right now Chesapeake is dealing with that on some of their ground. I think it's 700 hectares of their 4,200 hectare property at Metates has just been canceled.
What is your confidence level investing in Mexico right now?
Well, if the company doesn't have any ground there, like a junior explorer that's coming in green that doesn't have any ground and proposes a lot of new prospects, I wouldn't put any money in that one. If you've got ground, that's okay, but if you don't, stay away. It's going to be very difficult. AMLO, his presidency finishes September or something like that next year. So we'll see what happens, but he's still very popular in Mexico. So I don't know that if his party, Morena, will still get through next year. If they do, some of those policies that he's put in place may continue, but they might be watered down. But what a lot of people are hoping now is that the constitutionality of these will be challenged. No. So what we haven't heard is a lot of companies talking about it. It's interesting to me because I'm not sure if they're like being, putting their head under the sand on this, or they just want to see what the actual, policy is.
Just a lot of headline news right now, but not a lot of implementation yet, I guess.
Well, besides Metates, that one came out. Radius put out something because what basically they said is anybody who has a pending concession, and concessions in any bureaucracy over the last couple of years has been very slow. And so they were saying that anybody who has a pending concession, now it's canceled.
Okay.
So if you had a concession out there for all this ground, you were working in it, waiting for the government to approve it, and there were no issues, basically you got to start from the new policy of actually claiming, as opposed to you're not being grandfathered.
Okay.
The only people that are being
can be tricky. Okay.
That is huge if somebody, because sometimes what junior mining companies do is that they apply for a bunch of concessions and they basically don't worry about the application getting approved, because once it's approved, that's when they have to spend, spend money. So they like to get huge tracts of land, don't worry about the application being approved until they pick the ground that they like. But now if they waited too long, there's a risk that it's all been canceled.
Interesting. Okay. Let's table Mexico.
Yeah.
I think we've covered that extensively. Let's talk about Chile and the new royalty scheme there, because that's based on tons or copper tons production annually. And
I think it's over 50,000 tons.
I think 20, 50, and 80, are the levels. I think, or 25, 50, and 80. But that's also copper equivalent, meaning if you produce gold in that amount or equivalent, you also fall into that. Is that correct? Or
Yeah, I don't know because
Okay.
I just saw copper. I didn't know if they were putting an equivalency
Alex
on
Black
it.
from Rio 2 made a comment on Twitter. That's in that regard.
Yeah,
So-
I don't know that. I don't know.
Okay.
I can't
Curious.
say
Okay.
for sure if that's the case. But definitely, yeah, over 50,000 tons. You know, the whole idea is that the rents going to the government are going to be like, I think 46 or 47%. So whatever change in the royalties or the taxes, because the corporate tax rate hasn't changed, it's all these other taxes that they put in place depending on that tier production schedule, is to achieve a 46 to 47% return to them on the rents. So it's not like if this one goes up, it's not like all of them are going to go up. The combination of everything will give them whatever it is, 46 or 47%. That's the same thing. I mean, in Egypt, it's like 50%. Like whatever they make, whatever law they make, whatever combination, we get half. That's the way it is.
Sounds extremely high, though. Like, how does that compare to other
Well,
countries?
I mean,
and-
they were comparing it to, I believe it was Australia and another one, maybe Peru, and they were like in the 45s.
Okay.
So yeah, it's higher than them. So they're at the highest level. But I mean, it's not Egypt.
Not outrageous. Meaning, it's not an outlier. It's on the higher end.
It's on the higher. It's definitely they're pushing it up. But the problem now is that what we'll see is that, you know, when we're having all these critical mineral policies come out by the States, by Europe, you know, some producing countries are like China, sorry, not China, like Canada and Australia. Now other countries want to invoke their own policies. They want that upstream or downstream, a processing facility locally. So they're all talking about that. They're all talking about, you know, building and then controlling their resources. So Mexico also wants to nationalize or is looking to nationalize lithium. Chile is looking to nationalize lithium, which is different than everything else, but they're trying to get it such that any company has to do a joint venture with a state-owned company, which, you know, is going to be an arm of Codelco. I don't know, but it's going to be a lithium company. And Mexico is probably going to be doing something similar. And so the problem there, my thinking is there is the contagion to other countries that haven't stepped up yet. Then saying, oh, you know what, I can do it now because Chile's already put it in and Peru's already put it in, and I want to be comparatively better, but I don't want to be that comparatively better. You know, I want to bring it up, but I still want to be the best, but I don't want to be 10% lower. You know, I want to be like 3% lower or something like that.
Has that changed your confidence level at all, investing in Chile? Or has that actually given some confidence back now that there's some clarity around the royalty scheme?
What I would watch is like in Chile is what what Freeport does. Because Freeport was holding back a major investment in El Abra to convert, like they did in Cerro Verde in Peru, which was a solvent extraction electrowinning on the enrichment. They converted that to a milling to produce concentrate. You know, it's a big capital expense, but it's totally changing the mine, going deeper, taking the primary sulfide. They want to do the same thing in El Abra. They've been holding back until the government had more clarity on the taxes and royalty scheme. Now that they've got this clarity, now what do they do? Like we've seen M&A in Chile. We've seen like previously South 32 purchasing an asset there. We've seen Lundin with Caserones. So we've seen some M&A suggesting that these people don't have a problem with operating in Chile. Now let's see if another capital investment comes in, because most of these guys were acquiring production without a big capital investment. Let's see, like with Freeport, whether under the new tax scheme they generate the kind of benchmark returns that they want to on El Abra on their price tag.
That sort of set the mood for the rest of the industry, right?
That would be the one I'd be watching. And in Mexico, I'd be watching all these concessions that people have applied for. Can they be grandfathered? What tweaks can we see to the policy? Those are the sort of things I'd be watching.
Interesting. Might make sense to set up a company just to snipe some concessions. At least might open some doors for you.
Yeah.
Or some opportunity, not doors, but there might be some opportunity.
Yeah, no, I mean, Mexico is obviously, the biggest silver producer. It's a top 10 copper and gold producer. So it's not going anywhere. It's got a lot of big companies that are local operating there, like Grupo, Fresnillo, and Peñoles. There'll definitely be some pushback.
Interesting. Yeah, let's keep an eye on that.
Oh, and then also in Mexico, I just read that AMLO is trying to take away a railway from
Grupo.
From
That's
Grupo.
from Grupo Mexico,
yeah, that goes east-west, and he wants to create another Panama Canal, but on rail. So that is worrying people as well.
Interesting.
Yeah.
But there's a lot of volatility in Latin America in terms of politics and left or right. There's a lot of volatility.
There's a lot of volatility in the States.
Yeah, because Peru voted extremely left, and now they're swinging within 18 months all the way to the right again.
Well,
and
now,
I'm not an expert on it. That's just what I'm reading on Reuters.
We've also got, in Ecuador, that president, dissolved Congress because he was on the point of being impeached. And so now they're going to have another election. So, yeah, it's
political.
And then in Colombia, Zijin Mining, with Buritica, they had what they're calling a terrorist attack by some of the artisanal miners, where, a few of their people were killed.
Brutal.
Yeah, so we're seeing a lot of that, but problematically, we're seeing other things in the States where, we're pushing for critical minerals, but we're not permitting projects as fast as people need them permitted. Canada's probably all right. They're getting permitted, and now they're starting to help them find money. But I'd say out of all these jurisdictions, one of the ones that looks pretty good, let's see how Lula does, is Brazil.
Could be a big winner from what I've been reading out of all of this.
Yeah, and what's nice about Brazil is that they'll go both ways with respect to, they're not going to be dominated by the States in terms of where their material goes, or China. They'll be diversified.
Interesting. So the BRICS might lose the B, just more to a neutral.
Well,
more neutral.
They will still sell to the States, but they won't be dominated by one or the other.
No. It's not like China's invested big time into Brazil in the past, like they've done in Africa or even parts of Middle America.
Argentina, they've invested big. Zijin is obviously, Colombia is another Chinese firm. They've gone into Guyana big. There are South American countries that they'll go into. The ones that they find problematic are the ones where social license dominates the agenda.
Interesting. Okay, interesting discussions. Lots going on.
Yeah.
I'm curious. I'm speaking at Paul Harris's conference in early June in Ecuador about financing flowing into Middle America, or Central and South America.
Yeah.
Really curious. I haven't done my homework yet. So
yeah, well, find out, because they are definitely going through another election.
Really curious, because flow-throughs shot up through the roof here in Canada the last few years, obviously, but it also has to do with money not being able to be invested. In other jurisdictions.
Let's make sure that we get flow through right in terms of the incentive for flow through. It's a tax, incentive for people that are wealthy, but they don't care about management. They don't care about the asset. They don't care about what you're doing. They just care about the tax break. So what we need to see is hard dollar investing, and we need to see it everywhere. And that's a big advantage for Canada to be able to tap markets like that.
No, it's a good idea for a slide. It's hard cash versus flow through, because I know flow through has been much lower, smaller component in previous years. I think it was in 16, 17 when the market was doing decently okay.
Yeah,
and money flowed into South America, for example.
Yeah,
then it came back up, and I personally associate it more with some of the political turmoil that some of the money doesn't feel comfortable being invested, for example, in South America.
Well, you're still going to get probably people interested in South America, like for lithium, because people are just nuts rabid about lithium. And so you'll see an explorer looking for lithium in Argentina that'll still get finance probably, or one looking for lithium pegmatites in Brazil or something like that. You might see that financing. You'll definitely see that financing if they're looking for lithium pegmatites in Quebec right now. But to look for, gold in some of these places, not so much.
Okay. Joe, we have still two big topics I want to tackle with you. One of them is M&A in mining. We're seeing quite a bit right now. Mega merger happening, Newmont and Newcrest. I want to discuss fallout because you're an ex-Newmont employee. Curious what your insights are. But also I want to talk about getting or looking at metrics of economic studies and whether we have to get used to lower like returns in general. And we'll get to that part. I want to talk M&A in mining first because it speaks a bit to sentiment as well. Newmont, Newcrest, Glencore, Teck, Cisco and Goldfields, B2 Gold buying Sabina. So there has been quite a bit of activity.
Yeah.
Sentiment is still bleak. So my question is now, like, A, what's the mood towards M&A? B, are there any M&A targets? And C, what is happening with the money? Meaning Newmont, Newcrest isn't it $17.2 or $18 billion transaction. Where's the money flowing? And I'm looking at all the indices that are going to be sitting on, let's say, 15% combined weighting of both companies. What do you think they're going to do?
Well, I think with Newmont and Newcrest, that deal for me makes a lot more sense than the Goldcorp deal. Because not only do they build a bigger company that makes a significant jump from their second leading competitor, which would be Barrick. So the ability of Barrick to catch up to them by making an incremental transaction is like impossible. So they would have to make a similar sort of transaction, but they're running out of those sort of companies to make that sort of single transaction. So then Newmont becomes what they've been trying to become, is that single competitor for the ETF. So they're not competing against Barrick anymore. They're competing against ETFs, and ETFs, what they try to sell is liquidity, diversification, the ability to come in and out. And that kind of exposure, and so because gold companies don't always offer that, but now the size of Newmont, they can sell the idea that they can give you all of that and diversification, because now they have a portfolio all over the world. They got multi-currencies. They're dealing with gold and now copper, but also now they have the cash flow to stabilize their dividends. And so one thing an ETF doesn't give you is a dividend. And so that might make people think that invest in ETFs and don't give the money to institutional equity anymore, to put the money into Newmont. And so they are no longer competing with, they're no longer basically dancing to the tune of the institutional equity that wants growth. They're dancing to a different tune. It's not Barrick's tune. Barrick's tune is still growth. And they'll do it incrementally. They'll do it how they want it, but nobody else is dancing to, what they're doing to.
Could be good timing, because I hear a lot of more active stock picking is happening by generalists as well. So they're moving away more from the ETFs, more into single stocks. Yeah. Because single stocks are performing while the ETFs are underperforming, because it's only a handful of companies that are doing decently well in this market.
Well, yeah, if you take, the equity markets are still, positive year to date, and really it's 7 companies apparently that are
NVIDIA,
killing
Microsoft,
and a lot of them have artificial intelligence AI exposure. Those are the ones that are driving everything because of the volumes. And that might be what ends up happening in the precious metal sector. A few companies, but what you also want, like we want, is M&A for the companies we hold. And I think the most encouraging are the sort of deals that we've seen with Sabina getting taken out by B2, and so that population of single asset developer that's sort of marooned because of the financing obstacle, they're willing sellers. The question is, who can buy them? Because there's less companies that are able to buy these companies, and so it's really suitor specific. And what do they want? What are they bringing to the table? Because B2 Gold has prior experience in the Arctic with Kupol and that as Bema, and so they're comfortable with that. I think this is still a little bit more problematic, but that's my opinion. But and Goldfields, they like underground. They've done underground, and Windfall will be underground. So they're comfortable operating that. And that joint venture model for them had worked previously very well with Gold Road. They never took over Gold Road's other half. They kept it as 50-50, but them operating, they were happy with that, because they were sharing the financing risk.
That makes sense. And I think Cisco needed sharing as
well,
they
to a degree on the
financing side.
They can get the money, but they can't technically, probably they didn't want to do it.
That makes sense. Dilution would have been crazy.
Yeah, and Sabina would have been insane as well in terms of the dilution to build it with their cost of capital. So you take the difference between a single asset developer's cost of capital and a mid-tier producer. It's cost of capital.
In the past, we've seen new mid-tier producers being created out of those mega mergers.
Yeah.
Right. Torix comes to mind, I think, for example. Do you see that happening with Newmont? Are they going to sell some of the assets like Musselwhite? It's been an asset I've been hearing quite a bit about, for example, and others. Do you think that's going to happen?
I would say, but I would probably, there might be less of that versus what happened with Goldcorp. What interests me is all the equity placements that Newcrest has done, because Newcrest has been quite active. Its exploration team has been quite active in the junior sector, and in North America, because they didn't have a footprint in North America until they bought Red Chris, and now they bought Pretium. So now in British Columbia they have quite the footprint. Now as a consolidated company, they have even a bigger footprint, because now they got 50% of Teck, and they've got the saddle properties. So I think that this is interesting, because Newmont, through the joint venture with Barrick, have ceded control of the joint venture. So they really don't have much in Nevada anymore, because everything they've got is related to Barrick, and Barrick's handling the joint venture. But Newcrest has been doing some interesting stuff outside. So it'd be interesting to see, when combined, do they continue to do that sort of exploration, grassroots stuff that Newcrest has been doing? Because I think, personally, Newcrest might have a better exploration team, hub, plan than Newmont, because Newmont, was all about, buying assets and consolidating a financial behemoth as opposed to exploration. So it'll be interesting to see how that works.
Interesting question as a follow-up. Now, we've seen these mega mergers happening, and Newmont is now 8 million ounce producer. Barrick is at 4, so there's 50.
And we see Agnico and the Pan American
closer to 3.5, 3.8, I think, so really catching up to Barrick. My question now is, looking at the junior exploration space, what is the size that a junior actually becomes attractive now? I think that
in terms of production or something.
In terms of production, exploration, reserves to a degree, to become interesting. I remember starting in the industry when I said, 100,000 ounces, 10-year mine life. Perfect. That's exact. Barrick is going to buy us next year.
Yeah.
Right? That was the benchmark 10, 12 years ago. Now it's more like 200, 250,000 ounces. Do you think that's actually going to get pushed even higher?
To make it incremental.
To make sense?
Yeah. Well, what these guys, if they want tier 1, they're talking about 500,000 ounces a year over 15. So there's not a lot of those. Even the ones we like are not that big. And so I think the more the M&A for those kind of companies, more like the intermediate, where you can make an impact on their production profile, and the single asset developer is a unique situation in terms of the discount that they have to their NPV because of the financing risk. The problem is, or the issue is, it's not just, here's my production profile, here's, my cash costs or whatever. It's the ability of the suitor to actually execute the plan. Are they comfortable? Is the plan actually make any sense?
Huh.
And do they bring a comparative advantage in doing the plan? Like with Newcrest, they bring a comparative advantage with block cave mining. That's what they brought to Red Chris. Whereas, the company that had it, kept the open pit going longer than it should have, because they didn't want to go underground. They didn't want to do the block cave because big capital intensity, but also they didn't know what they were doing. So Newcrest has no problem with this. And so applying that comparative advantage is really where an M&A suitor would want to do. It goes, you can't do that. I can. So you'll trade at a discount. I'll bring my premium into it, but I'm not going to pay you for what I know. The market will, once I get this thing going. So those are the sort of nuances to M&A that'll happen and continue to happen, is where do I have an advantage? Or do I want to get out of this jurisdiction?
Do I want to enter ESG as well? Single asset producer in an iffy jurisdiction, that's an ESG risk.
Well, yeah, depending on the country, because the problem is that sometimes, when they do exploration in an iffy country, they'll do the exploration through the private placement. So they do a private placement in the company, let the company operate, but it's got nothing to do with me. So there's a problem, or, hey, that helicopter, I can't fly in, but you can. We'll do it through you. Because I can't explore there. Because once I start exploring there, it'll cost me 10 times as much.
No, I'm thinking like Torix Gold or K92 that are in Guerrero, Mexico, or Papua New Guinea. Iffy jurisdictions, perceived iffy jurisdictions that might need diversification. Also, to tick that ESG box.
Well, see, that's the problem for, like a Nevson. When Nevson was going, Bisha was going good. They had the high grade enriched part on the top of the deposit. It was making a lot of money, but, big discount for Eritrea. And, so they had to issue dividends because dividends get discounted later. And then they had to acquire another asset to lower their profile, which was in Serbia, which ended up being Timok. So they had to do all that. But still, there's remnant ESG issues with the labor policies by the government. And this wasn't their issue, but the fact that the government said, you have to, and, these people were working on your road, because the government made the road, but they were making it with, what appeared to be indentured labor. And so then, Nevson was taking the hit for that. But that doesn't go away. So whoever bought Nevson, which was Asian, will take the hit for that. But it seems like some countries like China have less issues about trying to deal with ESG because they don't have to deal with ESG investors. So they won't mind that as much.
Yeah. Okay. Now let's put a bow around that M&A part, and maybe it fits together. Is the economics of projects? Like I want to talk about that. I saw a study the other day that triggered that question, where I actually thought, okay, it's a decent sized project, not the biggest, not the smallest. It's in copper, it's in Arizona, but then they put out a PEA, and the IRR was after-tax IRR was 16%. I was disappointed. So the question was like, do we need to get used to lower IRRs in general? Is that a new environment wherein maybe 25-30% is not achievable anymore? Do we need to get used to 15 to 20% as the new norm?
Okay, so copper projects require a lot of capital, and it's hard unless it's like a VMS, or something like that. That's smaller tonnage, smaller throughput. They need like over $1 billion, and so to generate that in the copper price, which you assume is going to be flat, which it never is, it's hard to generate a decent return. Like when I worked for Newmont, I did the analysis on Conga. It was Minas Conga in Peru, a big copper gold project. And, I started doing the analysis in 2005. Copper price was going up during that period. And every time I did it, the copper price was higher every time, but the return never changed. And that's because all the other costs went up. And so the IRR never changed. And I think I would debate whether, or should we get used to lower IRR, but maybe we should get used to people who are putting out more realistic returns on projects. Because the thing is that, a PEA is the best foot forward, but some people who want to sell a project want to make sure that that project has got what a potential suitor wants to see. He wants to see the metallurgy done to a certain level. They want to see the capital estimates done by a certain level. They want to see a reputable person, consulting company, doing the analysis that's concerned more about their reputation than the fees. And such that if they do consider, hey, I'm going to get, look at your data, they feel more confident that your data is real because I don't have to redo it. The problem is that when you see some of these IRRs of 50%, people just walk away. They go, that's ridiculous. or a negative cash cost. Give me a break. So people...
Because of all the bike credits.
Yeah, my God. It's not a byproduct if it's 50% of the revenue. I'm sorry. So that sort of stuff just makes you less of a potential M&A candidate if you don't put together the most realistic view of the asset, because then that's a lot more work that the potential suitor has to do. But also, you might be getting valued very highly because you put out a very good PEA, which is not realistic. So the suitor would say, why should I pay a 50% premium on this? Because none of that is real.
No.
Yeah.
It's interesting. Like there's also the dichotomies. Like, do you need to put out a PEA? Because usually the potential suitor has access to all the data and can do their own homework.
Well, it's like the old saying, if you got it, flaunt it. So if you like your project and you think it's very good and you've used reputable consultants, you want the market to know that such that you don't get taken out at a discount. You want that in the market. But right now, unfortunately, the market's not paying for anything.
No.
Or not a lot. So some people are concerned about putting that capital number out there. They're saying, oh, where are you going to get 500 million, 2 billion, whatever? Where's that money going to come from? And if you're not a critical mineral, and in Canada, it might be difficult, or in the States, it might be difficult, and you're permitted, to find where that money's going to come from. Yeah.
Interesting. Okay, no, I appreciate those thoughts, because I was looking at it, I was like, do we need to get used to just lower IRRs in general? I was like, maybe are we too greedy to a degree as well?
Well, I mean, again, a scoping study is the best any project will ever look. And so it's probably lower than that, once you actually get the real numbers in terms of the costs. But, the issue becomes, that's reality.
Yeah. Okay.
Yeah.
Well, that's just what we need to get used to. Fantastic. You already mentioned that you've participated in a couple of private placements. More general question: what gets you excited these days? Because we talked about very dry topics. We talked about. Let's talk about something that excites us, because the market is still gloomy, to say the least.
Yeah. Which presents opportunities, and so when people come to me, and it's people I've known for a long time, people who have had prior success in a jurisdiction I can understand, with a decent private placement, I'm willing to do it. Because that's potentially something that could lead to a discovery. So I'm not in it for short term, but once I get the people worked out, then I'm fine. And they know what they're doing. They put the land, and they've done this before, and they've got access to capital, which, as you know, is very important. And so when you have some big backers behind it, that they can control the share price, and they're not going to let it go down too much.
Any specific sector, meaning metal, commodity, because I know you've been on a lot of site visits. It was very copper focused.
Yeah, they have been. They have been when I went to, when I went to Egypt, that was gold and base metals as well, because they have volcanogenic massive sulfides as well as gold in the Arabian-Nubian Shield. But I did take a look at Sakari. I went to Chile and Argentina to look at a bunch of grassroots to development projects down there. And I'll go again in October. Copper has definitely been a focus for me. But one of my private placements was also in precious metals in Mexico, actually.
There you go. Feeling very confident there. Joe, you got to share favorite names with us as to wrap up the conversation. What have you been flaunting, because you used that word before, to your subscribers?
Or flogging. One that I like, and I'm down on actually from when I bought it in the letter, it was still Arizona Sonora copper. And why do I like it? I mean, one, it's on private land. Arizona is a great copper state. A lot of copper production comes out of Arizona, but unfortunately, it's not easy always to permit there.
They just got a permit, by the way, didn't they?
They got a very important permit, the last sort of critical permit, the industrial air permit, I think it was. So that and then everything else is state, and state's easier to get, county's easier to get, because where they are is a very industrialized area. So, but where they want to head to, because that's for the old study, taking Cactus, but what's really changed what they're doing is the Park Salyer resource, which is higher grade and leaches better, and lower tons but higher grade. But to bring that in would be modifications of those permits. Importantly, they have access to water, power's right there, they have rail, and they're sitting right next to a behemoth, which is Ivanhoe Electric and Robert Friedland. But and that's why, private land is very expensive there. But private land is sort of like the proxy for avoiding federal permitting. So it's almost like the time value of money.
No. Okay, that's copper in Arizona.
That's copper in Arizona. And another one is Origin Royalties. That's, I've liked the royalties just because when we had that, increase in costs, those are the companies that I've been going to try and flat G&A revenue, and they've been growing their revenue from their Ermitaño royalty. Mm-hmm. But the other big part of their valuation is their NSR. I think it's 1% NSR on the Silicon project that Anglo Gold's advancing, also that's in Nevada. Okay. So that's another one, and then I-80, which I'll actually be visiting Ruby Hill on Monday coming up. I'll be going through Nevada. And that's not an easy one. It's a bit complicated. They're doing so many things between Ruby Hill, McCoy Cove, where they got a 40,000 meter program, Granite Creek, which they're developing. But that company has access to capital, diversified with respect to their portfolio, needs a lot of capital injection, but importantly, they have access to capital, and it's in Nevada. And they have a lot of permits, and they have an autoclave.
And Ruby Hill's CRD discovery, right?
Ruby Hill was a Carlin-style deposit. It's a bit of a mix because it's in the southern part of southern part of Arizona, in Nevada, and that's where the intrusives come closer to surface, and so those intrusives are much older. They're Cretaceous, and those develop the skarns, which was blackjack, but also the CRDs, the hilltops, all the way to FAD, which they acquired. But also earlier, Eocene aged is the Carlin style, and they have Ruby Hill. Ruby Hill originally, the Archimedes pit was a Carlin deposit. So they do have Carlin deep, like Ruby Hill deep, but they also have hilltop, and that's where most of the excitement is right now, is that multi-kilometer trend, north-south trend to FAD.
That's why they bought their neighbor, Paycor, as well.
That was the FAD deposit. Yeah, that's right. Yeah.
Say hi to Tyler, by the way, when you see him.
Yeah, I will.
Fantastic. Yeah. Awesome. Joe, thank you so much for joining us here. It's been fantastic. Where can we find more of you?
More of me?
More of you.
It's at the website's explorationinsights.com. We've got some free material. I did a workshop on the lithium sector in terms of geology of the deposits that we'll be putting up there, or you could just contact us at Exploration Insights for a copy of the presentation. But there's a lot of free stuff up there, and it's easy to subscribe if you're interested.
I'm still reading up on your site visit reports that I found them on LinkedIn, by the way.
Oh yeah, no, I produced some of them that are for general consumption, and then I've got another more detailed report that goes into the letter.
I thought that was already pretty detailed when you shared it on LinkedIn.
Yeah, but we go to a different level.
Fantastic. Joe, thank you so much. Always great seeing you in person. Thanks so much for coming to our studio.
No worries. Thank you very much, Kai.
Awesome. Everybody else, thank you so much for tuning in. This was Soar Financially. We were joined by the fantastic Joe Mazumdar. Go check out the newsletter, explorationinsights.com. Joe is active on Twitter, more or less sometimes, but follow him there as well. We've got 5,600 subscribers or so, followers on Twitter.
Yeah, I'm not on Instagram. It took me a long time to get on Twitter, but it's just Twitter and LinkedIn.
Oh, perfect. No, but make sure to follow him, and really appreciate your time. Thanks so much for tuning in. Hit that subscribe button. It's, I think, right there. Right under my finger, right there. And leave a comment as well. Thank you so much for joining us, and we'll be back with lots more.